Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock. In this video, we will be analyzing two articles, to where the first one is titled Palantir Pre-Earnings, What to Watch For in Data Giant's Results. So we're going to be going over their key metrics that you as an investor need to be aware of as we head into their earnings report. After that, we're going to jump over to another article titled Where Will Palantir Stock Be in the Next 3 Years? So that means we're going to be going over their latest price targets and price predictions to determine if this is a good long-term company to hold in your portfolio. So if you want more videos on Palantir Technologies, don't forget to go and annihilate that like button right now, subscribe to the channel, don't forget to comment your thoughts down below on whether or not you think Palantir will have a positive or negative earnings report, which is going to be released on November 2nd, and don't forget to become a member of this channel for as little as 99 cents because that's what keeps me here on YouTube. But if not, don't worry, by subscribing, you're going to get this content for absolutely free. And if you've already pressed the like button, let's get right into today's stories. Palantir Technologies, as you already know, is a big data and analytics company which serves both commercial enterprises as well as government agencies, and this company also specializes in artificial intelligence and machine learning. And right now, we're going to talk about what investors need to watch for in Palantir's Q3 earnings results. So right now, we expect an uptick in the number of commercial customers that use Palantir. So as of right now, we should see an increase in the amount of commercial enterprises and commercial clients that are using and utilizing Palantir's software because their desire to leverage artificial intelligence has radically increased, and this is shaking the market right now. Ever since artificial intelligence came out, many large institutions are pouring billions and billions of dollars into this overall market so they can get an edge over their competition, and some commercial enterprises are using Palantir to give them an edge over their competition. So for some context, customers right now aren't required to use Palantir's other platforms such as Foundry or Gotham to become an AIP customer, which is their artificial intelligence platform. But luckily for Palantir, their AI platform has increased the interest in their overall products and services exponentially, and that's why Palantir's overall revenue will increase. But before we talk about that, let's talk about Palantir's net revenue retention, which has fallen recently. And this corresponds directly to customers not expanding their usage with Palantir Technologies due only to macroeconomic factors. So this has nothing to do with Palantir Technologies themselves or the overall products and platforms that they are giving customers. Instead, due to the volatile macroeconomic environment, these companies just can't afford to keep doubling down on Palantir. So we saw a slight dip in their net revenue retention rate. However, if Palantir's artificial intelligence platform continues to deliver on its promises, we would expect an uptick in net retention revenue rates, which is when existing customers expand their usage and double down on Palantir's technology by utilizing more of their products and services. Now, if you are an investor into Palantir Technologies, you probably want to know their fair value estimate for Palantir stock, because this is going to determine whether or not you are getting this company at a good buying opportunity or if you should sell the company and buy back in later. So as of right now, Morningstar, which is a very prestigious institution, currently has a fair value estimate for Palantir stock at around $11 per share, implying a 2023 enterprise value over sales multiple of 10 times. Now, clearly Morningstar is not the end-all be-all in terms of fair value estimates, but this is definitely a good rule of thumb to where if you can acquire this company below $11 and your average cost basis is below $11, then you are doing phenomenal right now. Morningstar also forecasts that Palantir's revenue is set to expand on a CAGR basis, or a compounding annual growth rate basis, of 23% over the next 5 years, and that is very good news for investors. It means that Palantir is growing very rapidly and that there is a long-term growth runway ahead of them, which means that the company's share price will naturally scale along with their revenues and profitability, which we will talk about a little later in the video. So right now, Morningstar expects the majority of their top-of-the-line revenue growth to be driven by commercial clients, which is what I've been saying for years now. And as a result of this, Palantir's shift to more commercial clients will enable Palantir to create a more stable revenue growth mix, which is exactly what we would want to see. Right here, if you look on screen, it's a chart that dictates when is a good time to buy this company or sell this company based off of their fair value. So clearly Palantir was trending lower, and that was the best time to buy this company, and since then it has become overvalued according to this article. So as you see, orange indicates that it's trading above $11 and the blue indicates it was trading below below $11, to where if it's trading below $11 or at $11, that would be the ideal purchasing opportunity and buying point for the stock, which is why I said earlier, if your average cost basis is below $11, then you are on track. You are doing very good right now. However, if it's above $11, then you are clearly being a lot more risky here, and your future profits aren't going to be as aggressive as if you had a lower cost basis, which is just general knowledge. But in our next article, we're going to be going over the low end and high end price targets, which are much higher and lower than $11. So remember to stay tuned for that. Right now, we do see that they have an economic moat, but Morningstar gives them a narrow economic moat rating due to their intangible assets in the form of strong customer relationships that the firm has built over time. Literally, this company has been in operation for over 2 decades, and they have phenomenal networking relationships with both commercial enterprises as well as government agencies. As of right now, Palantir has 2 main revenue segments, which would be their government revenue segment and their commercial clients. Luckily, Palantir gives both of these segments the ability to leverage their data to develop insights to create efficiencies in the organization's own operations. And this is going to be paramount for the future of not only these companies, but also the entire economy, because big data right now is very pervasive, and we see that artificial intelligence is taking over. And Palantir combines these 2 large markets, which solidifies this company as a market leader. And here's why Morningstar thinks this. The total digital data stored worldwide will increase to 620 zettabytes. And for context, a zettabyte is a billion terabytes, which is an astronomical amount of data. And by the end of the decade, it's indicating a 10-year CAGR of 28%. So with all of this data, large organizations are increasingly interested in trying to gain insights from their data to make them more effective and efficient to get an edge over their competition, and Palantir can do that exact thing for them. However, despite this, we still have people who are very positive and negative about Palantir. For instance, the bulls who support Palantir, who love Palantir and believe that this company is a fantastic buying opportunity, say that Palantir has strong secular tailwinds because of artificial intelligence and machine learning, because the AI and ML markets are anticipated to expand rapidly, and Palantir is going to be able to grow exponentially along with these markets. Now, the bearish naysayer critics, on the other hand, will say by Palantir not selling to other countries and companies that are antithetical to Palantir's mission or cultural values, this firm has self-restricted their growth opportunities. Now, let me be the voice of reason here. Both of these are true. Palantir is constricting the amount of customers that they can sell to. However, the bulls are still right that Palantir will grow along with the AI and ML market. So it really doesn't matter if the bears are right at all in this instance, because this company is still absolutely phenomenal. And with that being said, where is this phenomenal company headed in the next 3 years? Well, let's talk about it. The shares of Palantir Technologies at one point had increased by 140% this year, even though right now they are pulling back in their overall share price. And again, like we talked about, if it pulls back to $11 or lower, that is a phenomenal opportunity to jump further into this company if you are not already overexposed. But Palantir does face strict competition from industry titans, such as Amazon, Alphabet, and Microsoft. Currently, Palantir's PLTR shares trade for $14.69, while bearish negative naysayers believe this company is only worth around $5, while bulls say this company could surge up to $25. Again, $11 being that good fair value estimate, even though I think Palantir Technologies is worth more than $11 according to their fair value. But nonetheless, we do see that their shares have pulled back recently, and it's only a matter of time before we see what their earnings report will do to their share price, whether it be for the positive or the negative. Because remember, even if Palantir does well in their earnings report, sometimes the market acts irrationally and the company could fall even though they had great results. But let's not get caught up in short-term volatility or news updates. Let's talk about the long-term longevity of this company. Long before artificial intelligence or machine learning were the talk of the town, Palantir was building data analytics models and specializing in AI as well as ML. And that's why Palantir's technology is so far ahead of their competition, because they have been helping government agencies and private organizations for decades to deliver them real-time actionable insights from their large amounts of data, which Palantir can interpret. And with their new addition of AIP, Palantir is well positioned to capture more of this meaningful market, meaning that since the artificial intelligence market is estimated to grow at a compounding average annual growth rate of 21.6% in 2023 to where the market is currently worth $515.3 billion, that's going to skyrocket to over $2 trillion in 2030, and Palantir is going to play a large part in this. Palantir also is improving their profitability as well as their customer count. The company recently reported $28 million worth of net income under generally accepted accounting principles during the second quarter, and they are anticipated to bring in another quarter of GAAP profitability, which will allow them to be included into the S&P 500, which is phenomenal news. The company also anticipates further GAAP profits in the remaining quarter of 2023 and well into 2024. Lastly, Palantir is guided for a solid 37% year-over-year jump in their adjusted operating profits to $576 million for fiscal 2023, which is absolutely amazing. Palantir also demonstrated their robust customer growth to where now they have increased their customers by 38% year-over-year to 421 customers. That's why analysts currently project Palantir's revenue to be around $4.5 billion in 2026, which is over twice the amount that they are anticipated to bring in for fiscal 2023, which is supposed to be around $2.2 billion. And if we assume that, that means Palantir Technologies is growing very rapidly, so investors would be wise to get into this company as cheap as possible right now. Therefore, long-term investors could find Palantir to be a rewarding addition to their portfolio as long as they are practicing proper risk management by not overexposing themselves more than a 5% initial portfolio allocation to any singular risky growth company, including Palantir Technologies. So with all of that being said, this is a very positive news update. I can't wait for the earnings report to be released on November 2nd, and I will be coming out with another video which will dive deeper into the actual revenue forecasts, earnings per share, and profitability, so you know exactly what to expect, which will help you dictate whether or not the company's earnings report was positive or negative. So with that being said, if you want more videos on Palantir, go ahead and annihilate that like button right now, subscribe if you are new, don't forget to comment your thoughts down below, and with all of that being said, I will see you in the next YT video.